Hello, everyone, and welcome to our next technical analysis review for the Euro US dollar pair. Today is December 6th, 2012. We are currently looking at price action on the 15-minute chart. And as you can see, this yellow vertical line is drawn in, dividing yesterday's trading session from today's trading session. And as you can see, the bearish sentiment or tone that began on yesterday was carried over and handed over into today's trading session. Of course, for most of the week, we've been having limited volume, low volume, thin trading for most of the week, and the euro has been pretty well supported ahead of the non-farms payroll on tomorrow. But you can see that for today, we had massive risk aversion and this massive sell-off in the euro-US dollar pair. The pair had managed to fall 137 pips, primarily on comments released by ECB President Mario Draghi that caused investors to look for safety and pile into the US dollar. So we see this dollar strengthening happening for most of the day. Now, earlier in the day, the ECB released their statement on monetary policy to keep interest rates unchanged. And it was an hour later, of course, during the press conference that Draghi mentioned, he made some statements that for most of 2013, or really all of 2013, the Eurozone will be in recession, and they had to lower both their growth forecast and inflation forecast. And it was this news that triggered the strong risk aversion we saw today and the strong flight to safety in the pair. But of course, there's also still some small concerns about the looming U.S. fiscal cliff and whether Congress would come to some type of compromise before January 2013. So then this move was primarily bearish. So if I was looking for an opportunity to trade, then I would have definitely traded on the short side of the market. Now, let me go to the 30-minute chart because I wanted to show you something how for most of the week, the pair had been pretty well supported, and we saw this rally upward. You can see that the price was above our 100 simple moving average line. This purple line here is our 100 simple moving average, and on a few occasions it found support there on this 100 simple moving average line. But it was at this point up here where price found resistance that some news came out. The first was that the Spanish bond auction did not reach its maximum target. And we also had some bad Eurozone PMI and bad retail sales numbers out of the Eurozone. And this is what caused this move to the downside, this pressure, this weight upon the euro. And this sentiment carried even into today's trading session. So you can see how price broke below the 100 simple moving average line. And ever since then, it's been pretty much trading below this line. And it found support at this ascending trend line support that we see drawn in here. This ascending trend line support. Now let me go to the 3-hour chart so I can show you where this ascending trend line support comes from. It comes from the two higher lows that were formed on this recent rally or this recent move upward. The first on November 20th and the second on November 28th. It was these two higher lows that formed this ascending trend line support, and on today it found support there briefly. So then let me go to the 30-minute chart. So then if I was looking for an opportunity to trade, then what I would have done, I would have waited for a retrace off of this level for price to retrace and find some resistance, and it did at this 100 simple moving average line. And you can see that it found resistance here around this 30-80 zone, and we know it's resistance because it was tested twice and it failed to break through or break higher. So what I would have done, I would have waited for the second retest to enter again. I would have entered when price reached this resistance at the 100 simple moving average line and entered my short position at 30.78 upon bearish confirmation. So I would have entered my short position here. I would have placed my stop loss at 30.91 above resistance at 30.91, and I would have held out onto this trade and took my profit when price had reached this ascending trend line support again, right here, for about 30 pips. I think it was, this ascending trend line support was at 30.48. So now I would have closed out there for about 30 pips. And this is also where our weekly R1 level was positioned for our weekly pivot point calculation. But if you want it to be a little bit more aggressive and take advantage of this bearish momentum in the price that was caused by the fundamentals that came out, then you could have also held on to this trade, and you could have closed out your trade or took your profit when price had reached this 130 psychological level right here. You could have closed it out for about 78 pips, or you could have even been a little bit more aggressive if you were sort of like an intraday trader. You could have held out into your trade. You could have trailed your stop loss closer, and then you could have held out into this trade and maybe close it out when it reached this weekly pivot point level at 29.64 for about a 114 pip trade. So then those were, of course, a few. This was a one trade entry that could have had a few different outcomes depending on what type of trader you wanted to be for today. But you could have made a lot on this drop lower if you were on the right side of the market. The market was primarily bearish. The fundamentals proved it. So then, of course, price found support at this 29.50 area, and it retraced a little bit, and now you can see that it's sort of like trading lightly. We're waiting to break out during the next trading session, and it appears to want to head lower and even test this low again at 39.50, but only time will tell. Of course, the Asian traders still have to come in and trade this news from earlier about the news from the Eurozone and what the remarks from the ECB president Mario Draghi. So I think we're going to see a little bit push lower also during this Asian trading session. But that's pretty much it for my technical analysis review for today. Remember that on tomorrow we do have non-farms payroll. So if I were you, I would either sit on the side of the market and wait for price action after tomorrow's non-farms payroll report. Or if you wanted to, I mean, you could just wait for a breakout here. But just to play it safe, we do have non-farms payroll tomorrow, and during most non-farm payroll days or weeks, we normally see limited trading, range-bound trading leading up to that report. So then, of course, that's it for my technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Okay then, bye.